let's make a Bitcoin price prediction. You guys know I've been bearish. I've been betting on my bearishness and shorting the market, and I've been making a significant amount of money. So what I want to do today is try to predict Bitcoin's price for the future so that we can make a significant amount of money. Obviously, none of this is financial advice, but people tend to make money off of the videos that I talk about. You know, that's you though. That's you. I just want to be clear. Pat yourself on the back if you've been making money. I want to give you the credit because you're the one that took action. I'm just giving you guys information and my research in an unbiased way. So if you appreciate this content, do me a favor, like the video, subscribe to the channel, and share it with a friend that needs help. Because there's a lot of people out there that really think the bull run is going to continue. I don't think that's the case at all. And I do think the bear run will last a significant period of time, which is the primary subject that we're going to be talking about today. How long is the bear run going to last? At what point can we start accumulating altcoins? Because like I told you, dollar cost averaging works. It's just that you have to do it at the right time. You cannot dollar cost average at the wrong time. If you do, you're going to get wrecked. And what's going to happen is there's going to be maybe hard times in this recessionary period. And maybe you have to sell your cryptocurrency to pay bills. At this point, it's not even an investment. You know, some people can lose their job. Some people can get liquidated, like BlockFi, for example, today, file for bankruptcy. You could lose your cryptocurrency in so many ways. So people think, oh, I'm going to hold through the bear market, but that actually might not be a reality. It's a lot harder to hold in the bear market than a lot of people think. So personally, the way I offset that risk is by not dollar cost averaging way too early and making money on the way down too. So if you make money on the way down too, it opens up room for losses, right? You could lose a little bit more money and it won't affect you. And dollar cost averaging in the bottom is the safest by far. You do not want to start your dollar cost average at the top because as you go down, you're going to have to continuously buy and accumulate so much losses and pain. You could do it, but it's going to be very painful for a lot of people. And I don't think the average person can pull that off. And if just to give you a background story, I've been in cryptocurrency for 7 years. I've gone through multiple bear markets and I was exactly in this situation. I dollar cost averaged way too early. I had 95% losses. I had to sell my cryptocurrency at a massive loss because at the time I was broke. And I had to pay bills. And this is an actuality for the common person or somebody in retail that doesn't have a significant savings. Sometimes things happen. You have medical bills, random things happen that you have to pay. And I just hate to be the guy, that said, I told you so when you have to sell your assets at a massive loss because of an emergency situation. So in my personal opinion, the best strategy is to make money now and dollar cost average at the right time. So right now we're making money by shorting the market, and I do think this is going to continue to play out. So just to give you kind of a sneak peek to the video, I do think that we have one more leg down, one more massive leg. And my goal is to short that to make money. But when we do reach the bottom, okay, the question is, when is the bull market going to come back? And I'm going to try to provide you with a qualitative and quantitative perspective. Qualitative in the sense of world events, okay, what's going on in the world that can catalyze the market into a bull run, and quantitative in a sense of technical analysis. So I'm going to hit it from a 360 perspective of what I think, and then we'll see how this Bitcoin price prediction plays out in the future, okay? So I just want to be clear with everybody. I'm actually planning on making a specific move. Me being in this market for a while, I'm very confident in my skills. So this is actually very interesting. I've done this before with a Tesla Model 3. So, in the middle of the bull run, I would say this one's going to be better because I'm going to do it in the bear run. But in the middle of the bull run, I did estimate that Ethereum was going to move up in price. And what I did is I took a $200,000 loan. I literally invested $200,000 of Ethereum and Bitcoin. And then what I did is I took a loan against it and bought a car cash, which is tax-free because if you take a loan against your cryptocurrency, it's actually technically tax-free. So I took a loan against it, bought a Tesla Model 3 with cash, like literally just paid the whole thing off. I don't have any payments on my Tesla Model 3. And then the value of that 200K went up to, I think, like $500,000 or 800K. I don't remember the exact numbers. I have videos talking about it on my channel, but it paid itself off. So if you do that in the bear market, right? Let's say hypothetically you wait for the exact bottom, we get one more leg down, right? And let's say you have $50,000. A lot of people take this too far. You could do this the wrong way, just to be clear with everybody watching this video. You could do this in a way that's very aggressive and greedy, but you could also do it in a way where it's very safe and you don't get liquidated. Again, I only recommend low leverage, low risk. I keep the risk so small. That's what I try to do. Okay. So you can definitely do this. And I'm doing it to buy a house potentially. That's my goal, is to invest a significant lump sum of money at the bottom of the bear market, take a loan out against that money. So let's say hypothetically, I'm just throwing out numbers. My goal is to invest $500,000 to $1 million. So let's say hypothetically I invest, I don't know, 50K, because that's kind of like normal for the average person in America. Let's say you invest 50K. Well, technically you could take out 10K, 20K as a loan, use that money to pay your bills, or use that money to invest in a down payment on a house, or use that money to buy a car, whatever you want. And then if the value of the cryptocurrency increases, then it will automatically pay the loan off itself. And that's why I want to show you guys these financial tools are amazing if you know how to use it and you understand risk management. Now, number one, we're not doing this on an exchange that could potentially go down. Number two, we're doing it at the bottom of the bear market. So how much further can it go down, right? Like at a certain point, when we do get this extra leg falling, because I do think the market's going to fall one more time, there's going to be a point where it's like, okay, the market can't go down too much more, right? And if you set your risk parameters very low, meaning you don't take a massive loan against your money, like for example, if you take out 10K on a $50,000 loan, that's a 5-to-1 ratio. That's pretty low risk. That's really low risk. If you do that, then the market could go down a lot and you won't get liquidated, right? So these things, having good risk management is really a game changer, guys. Just degen altcoin mode, buying as much as you possibly can and not caring, it's not the answer. It's never been that answer. Okay. Closing your eyes, listening to a free Telegram group. I'm trying to show you guys how to become professional investors so that you can, for example, manage your parents' portfolio. You can help people make money in these horrible financial conditions. I remember before, when I didn't have any money, I remember when I didn't understand finance at all, it would have been great to have a friend tell me, hey, Alex, invest in this thing called cryptocurrency and you can take a loan out against it and use these financial tools to your advantage so that you can extend your capital, right? Like, I wish I had somebody to do that. But let's jump into the main topic of discussion here, which is Bitcoin's price. Of course, let's predict the price of Bitcoin. So the first thing I want to show you is the Bitcoin halving event. I'm not going to explain the Bitcoin halving event because I've explained it so many different times in different videos. Go ahead and Google search it if you don't know what that is. But basically, if you look at the Bitcoin halving event, we have tops and we have bottoms in the middle of the Bitcoin halving event every single time. So the white lines here are the Bitcoin halving events, which decrease the inflation of Bitcoin and increase the scarcity. So as you could clearly see right here, okay, we have tops and bottoms in the middle every single time. Tops and bottoms, right? Tops. Now we're waiting for the bottom. I took the bottom of previous Bitcoin halving cycles and I looked at the time horizon and we're right on the time horizon. I've actually been calling this for almost a year now, saying that around this time period, I drew this out. Guys, if you go look at my videos 6-7 months ago, I drew this out and told you that we're going to have a leg down in this blue line here. I said towards the end of the year, I said October, November, December, we're going to see a leg down. Now this month we saw this leg down, but I do think we're going to see another massive one similar to what you see here. So we had like one and then we had a little sideways action and another one. I think it's going to happen within the next month or 2 months. So I'm trying to spread as much awareness as I possibly can. And when we do get down here, the bottom, I don't know the exact price, but I think 13K is minimum. I think 13K is minimum. It can go down to 10K for sure. It could, but I'm not going to guess. When it gets down to 13K, that's the time where I'm like, okay, I'm not going to short the market because it'll be way too low. Right? And that's the time where you start buying and accumulating, but it's not the time right now. We still have a massive leg down. I do think this is a reality. Also, if you look at it, that's a 22% loss. But me, I'm not shorting Bitcoin right now. I'm shorting altcoins. So for altcoins, it's actually, like a 50-60% drop. So from a risk management side, this is actually, in my personal opinion, it's smart to continue to short even now when a lot of people think the bottom is in. I don't think the bottom is in any way, shape, or form, and I'm going to explain why. The first one is the Bitcoin halving is way too far. So as you can see here, we saw bottoms when the Bitcoin halving was far away, right? 539 days, 511 days. We're 483 days away. Now that's getting less and less, but that's still a long time. Guys, people can't even wait 48 hours. People can't even wait 7 days. What makes you think they can hold the bag for 483 days, for almost a year and a half? I'm sorry, but people just have very, very short time horizons. That's how human nature works. And I'm going to stick to that. And I do think that the Bitcoin halving is the most significant event in all cryptocurrency history. I think it catalyzes everything. So as we get closer to the Bitcoin halving, this will play out, in my personal opinion, at least right now, until something changes, which of course I will update you and let you know if something changes. But right now, I'm going to stay consistent because it's been making me a lot of money. All right, let's talk about recent history for Bitcoin, because this could also catalyze the market in a downward trajectory. And I also want to talk about two major events that can catalyze us in a bull market. So if we look at every single top, I mean, it all has to do with some type of regulation. In this case, this was the top of Bitcoin in this specific area here, which is an executive order on improving the nation's cybersecurity. We have 56 million seized in crypto. This is another kind of like regulation. President Biden announces the release of a strategic petroleum reserve. So in this case, this was like the energy crisis. There's a couple of variables I want to talk about. These three cases were regulation, which dumped the market. This one right here was also regulation. This dumped the market. These are significant events. These are no joke. It fell a lot, 35% down. This one fell a lot too. 42% down. That's significant in my personal opinion. That's not a joke to play around with, right? Now we see other things, and I just want to let you know that Tesla did sell at a loss. So even them, they're out of the market. A lot of people are holding bags, and you do not have as much liquidity as Tesla. You don't. Tesla could buy the dip forever. You can't. And people still are holding onto their bags. I just don't understand why. But as you can see here, U.S. Treasury sanctions virtual currency mixer Tornado Cash. So yeah, again, regulation bringing it down. And then we had midterm elections that caused this dip here, okay, as you can clearly see. Now, midterm elections are interesting because although it was a 50-50 split, not really, but it leaned towards Republicans. Now, if you know anything about politics, Republicans are like kind of like business owners. They're like the big corporatocracies. They're the people that have positive regulation on, anything technology. They typically are pro-regulation. They're not like hindering innovation. Another thing is that they don't like taxes, right? So they're taxing people less. Essentially, the best way to explain it is Trump, right? Trump is like he's a business guy, right? He's a business guy. He was one of our presidents, right? And right now in the midterm elections, it's leaning towards Republicans. So it looks like the Republicans are getting control over the White House to a certain extent. And I do think that in the future, I'm predicting it now, we're going to have a Republican president, and it's likely going to be Trump. Look, I'm not for or against the guy. I can care less. I don't care about politics. I care about financial independence and making money. But I do think that he's going to get reelected in 2024, which is in November. And if he does, this is a business guy president. Okay. When Trump was in office, we went into a full bull run. Okay. So that's the first catalyst I want to talk about is if Trump gets reelected, it's full business time, guys. They're going to start printing money. Okay. So that's the first event. Okay. The second event is the Bitcoin halving, right? So these two things can catalyze us in the bull run, but the elections don't happen until November 2024. And as I said before, if we look at Bitcoin's price, the Bitcoin halving doesn't happen until 2024. So 2024 is definitely, in my personal opinion, the time for the bull run. I genuinely think it's the time for the bull run. Now, what can bring the market down? Well, we have so much. It's literally a longer list than this, but this is the main ones in my personal opinion. Now, I showed you that the energy crisis, regulation, and different things are bringing the market down. So obviously, the macroeconomic environment is bringing the market down. Let me say it again. Macroeconomics say that the market's going down. Inflation is slowing down, but has not stopped. If you understand the Federal Reserve and how it works, they need to have 2% inflation. Right now, we're at 8% inflation. What does that mean? So that means they have to continue to decrease spending until we get to 2% inflation. If they don't get to 2% inflation, people are going to start rioting the streets. People are going to stop using the United States as a currency if they don't get it to 2% inflation. So it is the biggest priority out of anything else. They don't care if the stock market keeps falling forever. Until it hits 2%, they will allow the stock market and every asset to fall. So that's the first thing. Okay. The second thing that's really big that I think a lot of people are sleeping on, that I think I'm actually predicting the future of it, is the unemployment numbers. The unemployment numbers are significant. They're big. Why? Because unemployment is a massive signal to the health of the economy. It's actually a lagging indicator in my personal opinion. So once we start seeing unemployment rise, that's like a lagging indicator or a confirmation that we are in a massive recession. We're already, everybody knows, basically we're in a recession, but there's still people out there like, unemployment is not rising. Employment numbers are good. People are getting hired, but that's actually starting to stop now. We see massive layoffs from big tech companies currently happening in the last month. It's literally happening right now as we speak. Okay. So with rate hikes, unemployment numbers, and inflation numbers, I do think that as they come out, because they do come out every month or so, like unemployment, I believe is coming out December 2nd. Don't quote me on that. I'm pretty sure I'm right about that. But that's coming out next month. When people start seeing the unemployment rise, the market's going to dump even more. Rate hikes come out every month or so. Inflation numbers come out every single month. So when these numbers come out, that will catalyze the market down because macroeconomic conditions are not changing. This is a big one, and I think it's the biggest one that people are sleeping on. Apple will miss its Q1 earnings. Let me say it again. Apple is going to miss their Q1 earnings. Okay. Now, if you look throughout history, when Facebook missed their Q1 earnings in 2021, Facebook stock dumped by 30%, which was the biggest dump in Facebook's history. Now, if you've been watching what's going on in the recent light of events in China, okay, China's protesting because of the zero COVID policy. Now, guess what? The biggest Apple iPhone manufacturers are in China and Taiwan. So there is no workers right now in China. There's a significant decrease. There's been reports saying that there's like literally less than 50% capacity at the Apple factories to make the iPhones. What does this cause? This caused supply chain issues. This caused iPhones you can't even order an iPhone for Christmas right now. Okay, think about that. Okay, so these numbers, Christmas Day, Black Friday, holiday season, that makes up the Q1 earnings. And it shows if Apple is profitable or not. And guess what? That's the most profitable time period for Apple the entire year. So the most profitable time where they make the most money is during Christmas. And you can't get an iPhone because of China protests and everything and all the mayhem that's happening in China. They're going to miss their Q1 earnings. This news just recently came out. They're going to miss their Q1 earnings. And when they do that, they're going to catalyze the market into a full-on bear market. This happens in January, okay? So we're talking about the next 2 months. These things are happening in the next 2 months, guys. Think about it. When Apple misses their Q1 earnings, it holds the biggest weight in the S&P 500. It is the leading indicator for the entire stock market. If I've made this in a previous video, you guys can go reference it. But Apple and the S&P 500 correlate almost identical. When Apple tops out and starts going down, the S&P 500 starts going down. When it bottoms and it goes up, the S&P 500 starts going up. So the S&P 500 is a risk-on asset. And guess what's in that category of risk-on? Bitcoin follows the trajectory of the S&P 500, almost a 3 or 4 to 1 ratio. So if the S&P 500 goes up 10%, Bitcoin goes up like 20 or 30%. If it drops 10%, then it goes down 20 or 30%. So risk-on assets, I mean, if you think about a cryptocurrency, it's basically a risk-on asset. Cryptocurrency is like pure speculation and hype, right? Think about these things. It's very similar to a tech stock. They're almost identical, but just more volatile. So this is happening. This is happening, right? When Apple misses their Q1, I'm calling it now, in January, the market's going to dump, okay? And this has nothing to do with even other technology companies. I'm talking about Apple, but there's other tech companies that are struggling right now too, that are all going to miss their Q1 earnings. I see it already happening because of the supply chain issues and everything that's going on. So those are big catalysts for the downturn of the market. Now, we also have regulation that's going to probably happen as well. People don't get this, but now that midterm elections is pretty much over, they're going to push a regulatory bill and bring in some type of stable coin, some central bank digital currency. They're going to do that now in the bear market where everybody's left, everybody's gone, all the hype and speculation's out. They're going to do that in the next year. I think next year and a half, they're going to do that. And I do think initially it's going to drop the price with the regulation like it's happened every single time. Regulation, 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 regulation. Okay. It drops the price every single time and it will continue to drop the price, right? So that's another catalyst to the downside. Potential World War III. Now, I'm not calling that. I don't know if that's going to happen or not. You know, I'm not a geopolitical expert, but that's definitely scaring everybody and we all know it. The energy crisis, we clearly talked about that. And we have semiconductor crisis. I mean, like, guys, there's so much catalyst for the downturn of the market. The only thing I see it reversing is if we get inflation to 2%. Once inflation gets to 2%, then they're going to start printing again. And that's likely to happen in 2024 with the election of a Republican president. I do think it's going to be Trump. It's obvious they're market making him now on Twitter. Elon Musk is pushing him. They unbanned his account. They're going to be pushing him on all social medias. Why? Because social medias are owned by corporations like Republicans because of less taxes and less restrictions and less regulation. So think about these things, guys. Think about what's going on right now. It's playing out right before your eyes. You just got to open your eyes and lower all the distractions out there on the internet, things that are holding you back from making money. It's as simple as that. The market's going to go down in the next year. I think in 2024, end of 2023 is where we're going to have the time to start accumulating. But for now, you got to learn short-term trading strategies. You got to learn how to short the market. You got to learn how to make money now. I'm sorry, but we got our bills to pay. You can't just go like this. You can't just be like, please come back, please. You can't do that. I'm sorry. I'm going to always force a responsibility on you to do your research and execute. Okay. I don't want people to be like this. Like, that never works. How many times have you heard other people say that if it's too easy, don't trust it, right? How many times have you heard that, hey, if it's this easy to get rich, just buy and hold, and you don't have to do nothing, do no research, you don't have to learn nothing? Doesn't that sound like a scam? It is a scam. They want you to hold because they're trading and they're selling and they need someone to sell to. So don't get wrecked. Don't be a fool. Okay. Don't be a fool. Think about it, right? Think about what's really going on. It's funny because I say the hard stuff, right? I'm telling people to educate themselves, get better with finance. Haven't you noticed that in life, the hard things are the ones that the people most reject, but is the best for their life? Like, for example, this is a good one. This is one for me. Okay. So I'm telling you all the truth. I work out, right? One of the most annoying things is core. I hate core, bro. I hate it. And as you know, core gives you the most strength. It makes all of your lifts increase. Obviously, you look better because your core can get ripped and you can lose weight. Bro, core is, some people only do core because it's one of the most beneficial things. It's their core. It works out the most muscle groups at the same time, right? And working out is one of the most beneficial things, but everybody hates to do it and they don't do it. It's the same thing with trading and investing. Everybody wants to just hold their cryptocurrency, stake it, and let the price go up. That's what everybody wants. And I'm over here telling you, hey, bro, it doesn't work that way. You got to learn something. You got to take an aggressive approach for your education and investing. And people don't want to do it. So, of course, people are going to submit to the cognitive bias of doing the easy thing and saying, hey, Alex, no, you're wrong. I'm not wrong because of my research. You just think I'm wrong because you just don't want to do the work. And if you accept what I'm saying, then you have to accept the fact that you have to take responsibility for your investments and actually work hard. And that's the problem, is that when people see me, they don't want to work hard. They just don't want to face the truth. They would rather live in their cognitive bias and lose money. That's the truth. That's the truth. But I'm done ranting here. Thanks for watching this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this video, guys. Catch you in the next one.